Well, friends, the day when the SEC finally said, all right, use your wallets, we won't touch you, has finally come. Elon Musk has added cryptocurrency charts to X, Tether has made a wallet for the people, and the war in Iran has reached chips and data centers in Asia. In general, as usual, we have something to discuss, so please like and subscribe, and we will take a look at the main crypto news of the day. Do you remember how the SEC strangled crypto for years with rules that no one could understand, let alone follow? And it looks like they finally lost their nerve. The US Security and Exchange Commission has finally relaxed the requirements for self-custodial wallets, and now interface developers don't have to register as brokers if they don't push users to make specific trades. In other words, now the creation of a wallet has become available to ordinary mortals. This is one of the SEC's most important clarifications regarding cryptocurrencies in history. As Hester Pierce said, cryptocurrencies force the SEC to fight internal demons, and it seems that we have started to defeat them finally. However, Hester later added that I would prefer a more sustainable regulatory approach, a revision of a definition of a broker, taking into account current market conditions, and that kind of makes sense. I know that it seems that the news is insignificant, but these are the direct steps by the SEC towards cryptocurrencies. And we see that with the massive arrival of institutional regulators, they are beginning to take steps towards simplifying and increasing the adoption of cryptocurrencies. So for those who still doubt that 2026 is the beginning of an institutional bull run, this is another reason to think. And by the way, if you want to buy and trade cryptocurrencies on the most reliable exchange, there is my referral link to OKX in the description. In my opinion, this is the best and most transparent exchange right now, and you will receive a welcome bonuses via the link, and I will receive a small compensation, and of course that will greatly help the channel. The link is in the description box down below. Alright, let's move on to the news that seems far from crypto, but actually affects everything. The war in Iran has hit the semiconductor and data center industries in Asia. The Strait of Hormuz is closed, the price of oil is above $100, the price of liquefied natural gas in Asia is almost $20 per million British thermal units. And that's exactly where the fun begins. The production of microchips depends on helium, and helium is a byproduct of natural gas processing. The main suppliers of helium are Qatar and other Persian Gulf countries. And in March, Iranian missiles hit the Qatari Ras Laffan complex. 1/3 of world's liquefied natural gas is processed there. Repairs will take from 3 to 5 years. South Korea, where Samsung and SK Hynix are located, buys 65% of helium from Qatar. And without helium, there are no chips. Without chips, there are no new graphic cards and servers for AI. And as a result, there is no mining in the same volume. So experts warn, orders for GPUs and memory have already built up for more than a year. A 2-month distribution and supply will extend to that timeline, and the situation will worsen and turn into a much longer-lasting crisis. And Moody's analysts David Payne bluntly said that there is no viable alternative to helium on an industrial scale. So let's talk about what does it mean for us. Delays in video card shipments, rising prices for mining equipment, and perhaps a slowdown in the development of AI infrastructure. But there is also good news. The government of Korea and Taiwan can provide factories with priority access to helium. And the United States will step in if there is a serious shortage because AI chips are a strategic interest. Meanwhile, a paradigm shift is taking place on crypto exchanges themselves, and the share of derivatives in the total turnover of centralized exchanges reached 76.5%, and this is the maximum since September 2023. The volume of derivative trading amounted to almost $4 trillion, and the spot dropped to 1.27 trillion. Traders go into leverage, they play on futures, and of course, they hedge the risks. Gold, by the way, entered the top 5 assets in terms of futures volume for the first time, $55.6 billion per month. At the same time, decentralized exchanges are losing ground, and their share in spot trading dropped to a year low of 14.3%. And people are returning to centralized platforms where there is liquidity and leverage. And meanwhile, Elon Musk continues to turn X into a super app. The social network has launched the cash tags feature for iPhone users in the United States and Canada. And now you can view charts of stocks and cryptocurrencies directly in the feed. Just simply type in $Bitcoin in the search bar and get the price charts and the posts on the topic as well. For Canadians, by the way, they have added a button to go to the Wealthsimple broker and they can immediately trade. Why not? Although X itself does not plan to be a broker, it is developing the X Money service, a digital wallet for P2P transfers, which is scheduled to launch in April. Musk hires people from the crypto industry and they recently hired a former employee of Aave and Base to become the head of design. So X, is slowly becoming a financial crypto platform. And the latest, hottest news of the day, Tether has done what has been expected of them for a really long time. They have finally launched a non-custodial wallet, Tether that wallet. It supports USDT, USNT, XAUT, and drumroll please, Bitcoin via the Lightning Network. The key feature is simple identifiers. Instead of entering a loan address, you can send money to name@tether.me, like an email only for the crypto. And the private keys remain with the user, commissions are paid in the transferred asset, and Tether does not have access to your funds. CEO Paulo Ardoino stated that the goal is to make digital asset transfers as simple as just sending a message. More than 570 million users are already using Tether technology, and the next step is to make the infrastructure available to end users. And they call it the people wallet because it is for billions of people without access to traditional financial system. And that's all the news for today, and don't forget to subscribe and like up this video, and I will see you tomorrow. Bye.